Hey everybody, this is Coach D here with TackleTrading.com. I wanted to take a minute just to put together a quick video showing you how to use the tackle trading scouting reports. So I thought I'd start out with a quick video on the stock report and just show you, one, how awesome the reports are, and two, what the real benefits are of using the scouting report, and three, how you can make some money. So I've logged in, looking at the scouting report, stock report, and this one was put together by Coach Grant Larson, which is awesome. And it's every week we put together a nice little write-up and a little video to explain the picks and how you can use them to your advantage. So we got this little video clip here, and I'm just going to click on the play button for just 1 second here. This is about a 20-minute video clip.
Markets have behaved in the past. We want to learn from the past. All right, so it was slowing momentum this week.
So you can watch the whole video, of course, and you got Coach Grant walking you through what we like about each of the setups. Now, as you walk through, he's got a little bit of a write-up, and then we have a watch list put together. And on the watch list, we have some entry and exit minimum criteria, kind of minimum maximum criteria. We expect you to take the information, of course, create your own entry and exit criteria based off of these guidelines. And then down below, we've got all of those charts laid out. And out of the Bullish watch list here, which I'm interested in this week, we have some nice little setups here, you know, across the board from the financial sector, consumer goods, industrials, technology. And I was particularly interested in this KOS trade. And KOS Energy here has a nice little cup and handle breakout. So what I like about the chart here, just kind of let me zoom in and show you what I like, is this cup and handle breakout pattern. So let me highlight that here. So this is the setup right here. And it comes up to resistance at 7, comes down, prices run back up to 7, hits that. They pull back, and we see a shallower pullback, and price is starting to go up towards 7 again. That creates that little cup and handle pattern that when we see this pattern, it's high probability that we're going to see a breakout to the upside. Now, if we take that and go ahead and look at the entry criteria here, let me zoom in on that so you can see it. So there is KOS. Right here, and we've got it above 702, so we want to trigger in above 702. We want to set our stop loss down below 665, and we believe the stock can rise to 760 or $8. So there you have it, and there it says, hey, we got a cup and handle, you know, pattern, and we are above the 200 period moving average, so this could be a really decent candidate. Well, now I'm going to just go over and I'm going to place this trade, and I'm going to do it in a virtual account just for demonstration purposes here. But I want to walk you through and just show you how quick and easy it could be for you to make that kind of move. So here's the setup in my Thinkorswim account. Again, I'm in a virtual account just for demonstration purposes. And I've got, there's the high price right there. And we want to see it take out that high. And that's around 702, 703. And it's trading at $7 right now. So we're really right on the cusp of that breakout. And we got earnings coming out here in we got it on the 6th, so we got plenty of time to get it in and out of the trade before earnings. And it's realistic, I think, in this case, to expect the stock price to rise to like the old support zones back here. And so I believe it can get out towards that 760 target, which would be about a 60-cent return on a $7 stock. That's pretty high percent yield. All the way out to like $8, and that'd be like 95 cents on a $7 stock. So just to put that into perspective real quick, let me do some math for you. So I'm breaking out the calculator here. And if we were to hit the first target, 65 cents, and we were to divide that by, let's say we paid $7.05 for the stock, that would give us a 9.2% ROI. Well, that's a pretty good ROI. But there's one little factor here that I didn't really explain. We're not going to be paying full price for the stock. We're going to be using margin. So that means we only have to put down 50%, and we're using a leverage, a 2-to-1 leverage. So that means it's not 9.2%. We could potentially exceed an 18% yield, and this stock could probably cover that distance in less than 2 weeks. So maybe a week or two to hit that kind of profit target. Now, if it got out to $8, and again, let's say we pulled 95 cents of profit, and we were to divide that by the $7.05 price tag that we're going to pay, that would give us 13% on a cash account, 26% on a margin account. And that is just mind-boggling. And if you look at this stock's personality, it can easily cover that kind of distance. It can make those kinds of swings in about 5 to 10 days on that. So somewhere in that ballpark. And with the cup and handle, typically what we do is we say, hey, well, if the cup's this big, we expect the target to be, that big as well. If the handle's this big. So I think we got a really good probability of that breakout, and all in exchange for a little bit of risk. Now, the risk here, if you go back and look at the scouting report, we got a stop loss down below 665. So, taking somewhere around 40 some odd cents risk in exchange for 60 cents to 90 cents potential reward. And this is just a simple swing trade, just a simple stock swing trade. And again, the scouting report was prepared for me. This is in a good sector that's got a good breakout. These picks have been carefully cultivated for technical reasons based off of what we like about the chart, the technical setup, what we think is going on with the sector, and we identify the entry and exit minimum criteria for you to help you identify that opportunity for yourself. And you decide whether or not you pull the trigger on that, but I'm going to go ahead and just set up the trade there. So let me go ahead, and I'm just going to do a real simple, we could just go ahead and buy that right now, but I think I'd like to wait for the breakout. So I'm going to go hit on the trade tab here, and I'm going to click on the ask price. I'm going to do a buy custom with a bracket, so I can set my entry, stop, and target all at the same time. And I'm going to change my entry to a stop limit. I'm going to raise that to 705, and I'm just going to put the limit at the same price, 705. So hey, I'm going to say buy if it goes above 705, but don't spend more than 706. I'm just going to give it a little tiny window to get filled. And then I'll set the target out there. I think I'll shoot for the $8 target and see if we can hit that $8 target. And then for the stop loss, I think I will put on just a regular stop here, and we'll manually adjust that up. And I'm going to put that down, again, just to refresh my memory, down below 665. So I'll go ahead and set my stop down at 660. I'll give it a little extra nickel of wiggle room there. I'm going to make all those orders good till canceled. And if I do 100 shares on this trade, my risk is going to be 40 cents or 40 bucks. So I could probably afford to do a few more shares on that. Let's say we went up with, 1,000 shares, just to put that into perspective for you there. So I could be risking about 400 bucks in exchange for making 600 to 900 bucks. If you're not comfortable with that, then you go, okay, well, let's do 500 shares. That'll expose you to about 40 cents risk. Again, $40 risk per 100 shares. So at 500 shares, you've got a reasonable amount of risk compared to your reward. I'm pretty comfortable with that. We'll make that good till canceled. And I'm just going to go ahead and hit confirm and send. And it gives me a little ticket just kind of reminding me what the order is. And I'm going to go ahead and send that in. And then just take a look at the chart here. I got my entry trigger price, I got my stop loss, and I got my target price out there. I got a favorable reward to risk ratio. I'm comfortable with the amount of risk, per share on that. And then the target, I think, gives me that potential for a nice, potential reward. Now we could analyze that trade real quick here, and I could throw that onto my risk profile here, and I could say, okay, well, my stop loss is down at 660, and my target, I believe it's going to rise out to $8. And the computer does all the math for you when you use a risk graph like this. And so we could see, there, if we were to get the 706 price, 500 shares, potential reward to risk ratio, we could be making up to about 470 some odd bucks at an $8 target in exchange for about $220, $230 risk, in that ballpark. So that's a pretty good reward to risk ratio, and I can feel confident about pulling that trigger. Now, if you like this little video, which I'm sure you did, click like, click share, and then, of course, come hang out with us over at TackleTrading.com. We got a 15-day free trial for you. You can take advantage of it. You can start getting those scouting reports for yourself and just see what kind of potential there is there each and every week over at TackleTrading.com. We'll see you guys there.